Right now is the best time buyers have had in the last 10 years to look for opportunity to enter the marketplace. Why do I say that? Well, obviously, it's because I'm a real estate agent and I always have to pump the market. Really, there's metrics that we use to see if it's a good time to buy real estate or if it's a bad time to buy real estate. Most people just focus solely on price, but the market is made up of a lot more than just price. And one of the things I'm going to show you here today has not happened since early 2014, and it's just happened again. So go ahead and subscribe to the channel if you would like to stay up to date on Surrey and Fraser Valley real estate. Click the like button if you're interested to learn more about real estate, because that's what this channel is all about. And feel free to go ahead and leave me a dirty comment down below because you don't like the fact that the market is actually looking pretty good for buyers right now. And with all that out of the way, let's hop into the numbers and take a look at what I like to call the consumption rate sales to active ratio. Now, I cover this on the channel all the time, and it's called months of inventory, except months of inventory is just a simple number. Like, for instance, if there's one listing sold and there's 3 active listings, 1 divided by 3 months of inventory in the last 30 days, that's 33% consumption. So this chart here just converts that into a percentage. And I just want to point out a couple of things. Now, we're really scaled out here. We're looking all the way back to 2005, and this is just the consumption rate, and it's rolling. And what I noticed happened here is consumption rate dropped to 12.2%. Now, I haven't seen a number as low as that until we go back to January of 2014 when it dropped to 11.7%. And before that, there was actually a couple of months that it was even worse than that over the previous years. At one point, this is November 2008, this is the great financial crisis, the end of the financial world in the United States, which trickled up into Canada. This got down to as low as 5%. So 5% is 1 in every 20 listings per month is selling. That's a really, really bad number. But right now, we're sitting at 12.2. Now, why do I say there's opportunity in these numbers? Well, let's just scale out here a minute. A balanced marketplace is between 1 in 4 and 1 in 5 listings selling each and every month. That's somewhere around 16, 17, let's call it 18% to 20%. So I like to use 20%, this line right here, as my kind of good, balanced, healthy market. And you can see when this number skyrockets like it did in December 2021, we were not in a healthy market. Prices were increasing in detached homes like more than $100,000 per month, month over month. It was absolute craziness. Within a couple of years, you had houses go from, or within probably a year, you had houses go from about $1.1 million in Surrey up to about $1.9 million. Then they've come back. So this has nothing to do with price. I don't want to get you messed up there and thinking that. But it does have to do with whether or not it's good for the seller or good for the buyer. Now, good for the buyer also gets a little bit confusing, and let me hop out here for that. Good for the buyer means prices are coming down. So buyers think, well, the longer I wait, that means I'm only going to get a better price in the future. And yes, I do believe that to be true. The longer you wait, when you have lots of inventory on the market and a very low consumption rate, particularly a low consumption rate, you're going to get a better deal in the future. But consumption rates don't necessarily stay very low for very long. And when they turn around, everybody kicks themselves because they didn't buy in one of those marketplaces. So let me pop back. So in other words, the higher this chart goes, the worse it is for a buyer, the better it is if you already own real estate. The lower this number goes, the worse it is for a seller. And you can see that's what happened in November 2008, the great financial crisis. So at 5% consumption, the market's absolutely terrible. And it's really, really rough. Well, let's zoom in here to see kind of where we've been. This is the last 3 years. Let's get even closer than that in the last year. We have now dropped into 12% consumption. That is a buyer's market. And a buyer's market is the point in time where you go, okay, you know what? Prices have come down. Prices are still coming down. This is showing sellers that prices will likely continue to drop for a while. But then let's think in our heads. Let's go back in time and go, okay, which one of these times sounds like a better time to buy real estate than now? So July 2022 to January 2023. Well, the market was dropping. And yeah, if you bought in July, you probably paid more than if you bought in January, and then you timed the market. right? So it was great if you bought in January, but January prices are a heck of a lot lower from 2023 than they are even right now, even after we saw that big fall off. Let's go back even further than that. May 2020, this is right after lockdown. We had a really, really low consumption rate at that point in time. If you went back then, you were probably still up 60, 70% from that point in time. 2018 and 2019, particularly, I guess 2018, it was not a great year. I guess it was in stratas. But again, we would all go back and we would like to be in that situation more than we would like to be now. Now let's talk about what I figured to be a regular market. When I got licensed, it was December 2008. So right here. But then we went through many years where we were right around the same consumption rate we are right now, where you have many listings expiring, you have many listings selling, and it's just a nice, healthy spot to be. And you don't have the pressures of a buyer to bid into, not having conditions in your offer. You don't have to overpay for a property. Insert comment here about everybody's overpaying for every property, but you don't have to go over list. You don't have to go into competition most of the time. And that's showing signs like it may start turning around now. But for instance, we have summer and fall of 2012 all the way through 2013. These were really low consumption rates, and it was hard business. It was hard slogging through back then. But buyers had more choice and they felt more in control of the situation. And we're actually heading back into that kind of a market right now. But the one thing I guess you need to focus on is it's really hard as a buyer to buy into a marketplace where you likely know that prices are probably going to continue to come down here for the next little bit. So you don't want to jump in. And at some point, I don't know when, I don't know if it's when we have more rate announcements and even deeper rate cuts, but at some point in time, this market will turn around. It's already showing like it is turning around slightly in October. These are September's numbers, but it is showing like it's maybe going to start to turn around. Maybe it goes back into a regular spring market. I think we got some more pain to go here, but at some point in time, people are going to look back at this point in time, let's call it fall of 2024, and they're going to say that was a nice, easy, calm time to buy real estate. And what I mean with that is it's a nice, easy, calm time in the transaction itself. If you are the buyer, you have time to go out and look at properties. You have time to think about properties. You have time to do an inspection and get your financing done. And it might still be there tomorrow if you think about it or sleep on it overnight. And just going back into it here just for a second to illustrate my point, anything above this 20% line right here is not that feeling. Anything above this 20% line is thinking about, do we even get to have conditions in? Are we in multiple offers? Do we have to not do an inspection? These are all things that happen simply above the 20% consumption rate or above, let's say for sure, 25% when we start hitting into the 3.5 to 3 months. 33% is a 33% is a seller's market. So it's really getting into like busyness. So right now we are seeing opportunity, although it be at very high prices and extremely high interest rates compared to where we've been over the last 20 years. Yes. But I'm telling you, there are people that are going to wish that they had done what they can to get into the market in a time like this when the transaction is easier. The downside to this market, though, is sellers, you don't want to give up your property for the amount that buyers are willing to offer right now. And as such, the market will likely continue to decline.